The next set we're going to discuss now is the inverse set. And this one's actually kind of interesting and it's pretty new. I myself haven't had the opportunity to dabble with it a little bit, but let's discuss the management strategy real quick. So the inverse trading strategy, um, as the name implies, the inverse sets follow the inverse price movement of a particular benchmark. So what this means is that when the price of the benchmark asset begins to dip, it starts to depreciate, the set begins to gain value or appreciate in value. So again, determined by the assigned indicator. So in this example, we're looking at the inverse ETH 20-day moving average crossover set. So let's go here and read the description, right? So let's highlight this. So the inverse ETH 20-day moving average crossover set attempts to capitalize on short-term price swings in choppy trading markets when moving average crossover strategies typically underperform. Okay, so now the indicator in use is the moving average. So now we understand how it's being monitored. So if the price of Ethereum crosses below the 20-day simple moving average, okay, there it is, the indicator once again, the IETH20 SMA CO rebalances to ETH in anticipation of a price reversion to above the indicator. And if the price crosses above the 20 simple moving average, the set rebalances to cash from ETH in anticipation of another downswing below the indicator. So in other words, what this is implying, or this is what this is suggesting, is if ETH underperforms and goes below the 20-day simple moving average, it will remain in ETH and start appreciating in value because it's the inverse. But once it goes above the 20-day moving average, it will then reallocate the funds and move it to USDC coin, right? So it's pretty simple. If the market is in a bull in a bull trend, right? This set in particular, or anything that follows the inverse trading strategy, will be in the opposite asset. So 9 times out of 10 be in a stable coin, right? So let's see another inverse strategy to kind of give you more perspective of what I'm talking about here. So let's look at this one, the 50-day. Same thing as the other set that we just viewed. The only difference is that it follows the 50-day simple moving average, right? And of course, since we're in a bit of an up market right now, we're in a bit of an upswing. The asset in use right now is USDC. But now let's see how it rebalances. So unlike the buy and hold set, the inverse set rebalances with within 4 days. The time since the last rebalance has been 8 days, so it might be a little time there. It's prepared to rebalance, as you can see here in the green dot. Plus, if it crosses the 50-day simple moving average. So if it's below, or if it's less than or equal to $155.76, as of right now, it's not. It's at $187.28. So there is no need for rebalance there. And as you can see here, is rebalance ready? No. And now let's look at some key facts. This set in particular is rebalancing in normal phases. It rebalances in an interval of 4 days. The last rebalance was April 16th, and the rebalancing tolerance is the ETH price of less than or equal to $155.76. So what the rebalancing tolerance means is the minimum price change a component token must have in order to execute a rebalance. So it must meet this bare minimum before rebalance can be initiated.